high. All right, our countdown closer says while the bottom is still not in, he's got a basket of stocks he is buying. He's prancing through the garden. He is Value Engine Chief Equity Strategist and Portfolio Manager Jordan Kimmel joining me now. Jordan, you're not with Mike Wilson of Morgan Stanley, who says the S&P's got to go down to 3,000. I keep hearing that for months. Right now we're at 4137. It's not going to 3,000. That's not the bottom, is it?
Right. Well, he's a bright guy, but what he's done is he painted himself into a corner and he can't get out. And I think that rather than have such a firm opinion on what you know is going to happen, you have to watch the market. And you know, what we have right now, Liz, is a completely pessimistic public. We have institutions with low allocations. And yet the market is not on firm footing. I've said that the bottom doesn't feel like it's in. The advanced decline line for the NASDAQ was basically at a new low right now. So it's been a handful of companies and then some magnet companies that people, need to know about. Yeah. But more important than what you think is going to happen is, Liz, the biggest problem is waiting for the bad news to happen. Nobody buys during the bad news. They get afraid. So you have to piece in slowly, know what you're buying, and have the confidence that if you buy right, you could add a little and keep going.
Yeah, don't be afraid. Just because we never assume that people understand what everybody's talking about here. The advanced decline line is the number of decliners compared to the advancers. And clearly what you're saying is too many decliners and they're swamping the advancers, right?
Exactly right, Liz, and thanks for filling that in. The point is, what you'd really love to see is broad participation. The new high list that looks with a lot of names, a low list that looks small. You're not really seeing that right now. It's been a choppy market. There's been a handful of stocks, well-known companies that have really led the advance, but behind it and stealthy, there are companies with value growth and momentum, growing revenue, and they're available to be picked on and picked off because they simply have no one's paying attention. Everyone's waiting to buy, and you have to gradually be increasing your allocation.
Well, what about this, Jordan? I'm thinking about Palantir, for example. Palantir had a really tough go of it over several months. In fact, it's been a while since it had climbed back to its 52-week high. It is still not there at the moment, but it has had a banger of the past 48 hours when it came out and said it will be profitable every single quarter this year. So it's adding 4% to the already 30% gain from, I believe, yesterday, or, it's a total of 34% jump this week alone. Do you go into something like that?
But here's what happened. The reason I'm showing you Palantir is that's a classic example of a company with a good business that was down literally 80%. It wasn't down a little bit. It was down way off its high from when it first came out, and then it based for a long time. I actually showed this stock on the show here a couple months ago on that first jump. Now it's clearly entering into a bull phase. You're seeing institutions buying in. It's in the right business, but this is one that's not anywhere near its all-time high, but you could see the current momentum has just come back into the company.
Yeah, for those of you who don't know, so it's at $9.95 right now, and the all-time high, or the annual high rather, is $11.62. So it's not quite there yet, but certainly getting closer. The low was $5.84.
Well, it was somewhere up at $70 and $80 a share when it first came out.
Exactly.
And that's where a lot of these IPOs, you have to wait for them to settle. You have to wait for your turn. And what I will do, Liz, is I will wait till the momentum begins to come in. So all of the companies I'm showing you on our list, they're all in uptrends, but they're all at valuations that I feel comfortable buying in at.
Well, all of your picks actually range from consumer and manufacturing to healthcare and technology. You've got Rockwell Automation. They're a friend of this show. Crocs is obviously consumer, along with Deckers. I'm interested to know why you're doubling up on two shoe companies. But that said, is this the best way to control risk right now in a portfolio?
Well, remember I showed you last time I was on, I showed you Jack Pacific, and that was right when Super Mario's had come out. And that's a company with a price to sales. It's hard to get technical, but the price to sales is around 3. That's about as cheap as you get. So I'm showing you some names that have stayed in my portfolio because they've been healthy enough.
Okay.
And I don't need to day trade and find it's hard to find a new beanstalk every day. If you find the right ones, Jesse Livermore loved to say, sitting right and being tight and is the way to go. And so these are companies with growth, value, and momentum. We own every stock in the portfolio that I've shown you that's on our list today, too.
And you've been very tactical in your stock picking, but overall, where do you see the markets going? Is this a sell in May and go away time?
No, I don't believe it is. I think that we're going to come up to some sort of one more scare to get people really out. What's going to happen, Liz, is when they finally admit we're in a recession, we know that the market probably already bottomed out a month before there. And so you'll hear about a recession.
Okay.
It will end up being a mild one. Anyone who will have bought a month before they finally admit we're in a recession is going to be having profits already.
Jordan, great to see you.